short video on gold. I think this is a great opportunity for price action to show us momentum to the upside. Okay, if we take a look at an hourly chart, we have come into a key area. Okay, this move down has come into a very key level. This is a bullish order block because this is a down candle that has taken prior liquidity on the left. We can see it's taken all these lows. Okay, we've had some nice reaction from that. Okay, so if we look at a 15-minute chart, we can see we've had a nice reaction from that. This here is a key level. This last up candle prior to this move down is very key. So that's a low. We have a lower low from there, and now we have a higher high. So that's a key zone that we can monitor and use as support. A move below that would kind of invalidate this long. These three down candles are also the bullish order block. Okay, we are now above that, so any move down into those three candles is the bullish order block for potential momentum to the upside. Okay, this here is the previous high. That would be my immediate level for draw on liquidity, and we have some alignment with that. So if you take these, I might be able to do this on an hourly chart. We just take this down move, which is essentially the false move down. Okay, this is inside of Asia. This move down aligned with a CPI news release on the Aussie dollar. Okay, news is often the catalyst to move the market. So this was a false move down inside of a key time at the 9:30 p.m. Aussie session. Okay, gold does trade in the Aussie session. Gold actually trades in all sessions. Okay, so you can get movement in gold in any session. So if we take the high and the low of that, whatever that range is, and then we project that range up from the high, then we get this 2336.95, and that aligns with the high of the previous day. So when you do a calculation like that and you're looking for a calculated target, the number itself is only important if you can align that with another key level. In this case, we've aligned that to the previous day high, and I think that will be the draw on liquidity. I am bullish on gold, as I've mentioned in previous videos. This candle here is important. It's coming, okay, we went above and into the bullish order block. We should get some nice reaction from this candle. So monitor this chart, okay, for your study, and have a look at this setup. You want to learn this setup where we have come down inside of Asia, which is a session in the second hour, right? At a time when there's a news release, we've taken out all these lows, all this liquidity has been taken, okay? And that has come down into a key area, which is another bullish order block, okay? We've had a previous nice reaction from that level, so we've come back down into that level. That's a bullish order block because, number one, we've had a nice price displacement from there, and that has also taken out liquidity from the past, so that's why we are returning to that, and that's why that is a valid bullish order block. Now we've gone above this down candle, which has also taken all this liquidity, and it is the down candle that's pushed into this order block, making this one, these last down two candles, valid order block. Okay, so this is the key, this up candle. We want to see price hold within that zone that I've marked out, okay, for price to continue moving higher. So study this chart, monitor price action, and see how this becomes the new draw on liquidity. Okay, so you want to learn this setup, understand what this is. This is also what they call a balanced price range. We've had a move down, okay, and price has now delivered up through that down candle, making that little area a balanced price range. We don't want to see price come below the low of this up candle. We can wick down through there, but body closures on a 15-minute chart should remain within this zone that I've marked out, which is the last up candle in that swing that created this low, which we are now above, making that up candle a support zone. Okay, so monitor the charts, see how this now behaves throughout the day, how the day evolves. Okay, we make it stop, hunch down into this area at the time of London or at the time of New York, but our draw on liquidity now should be the previous day's high. I want to talk with you in a future video.